we are now currently at we will be discussing the Open Portfolio 2021. And let's recall via Excel sheet, ano ba yung mga trades na in-enter at open pa ngayon at the moment. So we have open MOS, TXT, and since week 2, nasa week 3 na tayo at actually week 4 na tayo, pero 2 weeks ago na itong si TXT and most tingnan natin yung status and VNT and CLH KR. So okay, close na pala to. 24.88 stop loss plan dito. Tingnan natin yung NCLH KR. So right, so unang-una si MOS and TXT. MOS, okay. MOS. Ano ba yung stop loss natin dito kay MOS? 27.4. Okay, so 27 point. Tinamaan na to. So exit na si nag-drop yung price below the central pivot range, central pivot lower range. Pero nag-bounce back. Pero still wala pa rin nangyayari kay MOS. So MOS out na. So minus 1 R. MOS 27.4. So minus 1. Close. TXT 47.3. 47. Si TXT still on the trade but so far wala pa rin nangyayari. 2 weeks more, so expired na to. So I will just exit it with current price. So ano ba yung entry price natin kay TXT? 49.92. 49.92. So break even lang to. Break even, so konti lang yung difference. So I will exit this one. TXT 49.7. So 0. So break even lang. Okay, close na. So yesterday, bakit SPCE? So yeah, so SPCE, nag-re-enter ako dito kay SPCE kahapon. So look at SPCE. Ayan. So winner si SPCE. So kung titingnan nyo guys, if you will check at the right side of my chart, we have here SPCE consolidating at R1 since R1 since January 14, consolidate, then breakout January 21. When January 21 was last Thursday. So breakout January 21 here. Price just keep on holding. So January 21 last Thursday was here. So that price was actually above the central pivot range and just right below the R1. So it's very nice. It's a very nice setup, very tight consolidation, very tight central pivot range. And also you can see here the squeeze at the right side of the daily chart. The momentum is shifting from the negative and now making the squeeze and momentum turned to positive. So, yeah, so momentum is exactly from zero, I mean from below zero to the positive territory. And the result, wow, boom. So the current price at daily is near R3, so that's okay at the monthly basis, but it's already reaching the R5 at the daily basis. I mean the weekly basis. So let's check. And if you remember well, so I remember already that it was last week when I entered the option trade for SPCE. The stock trade was already closed. I gained 1.9 R. I entered at 26.45 and exited at 30.92. Then I also at the same time created an option trade. It's a bull call spread. So a bull call spread is when you are buying a long call and selling an out of the money call. So in the case of SPCE, I bought the strike 28. This is exactly around more or less zero point 0.7 delta call, which is expiring more than 40 days. So I bought it and at the same time sold an out of the money call at 40. So this minus one. Uh, the purpose is that I want to minimize this very large cost of buying the call to make it cheaper. So the average price for my bull call spread SPCE is $4.01 dollar per contract, which is equivalent to $401 if you multiply this to 100 because every contract of an option equals 100 shares. So you multiply this 4.01 times 100, that is your cost or the capital that you place for the trade. And remember that I am placing a risk of 50%. So therefore, for a bull call spread, for a debit spread, like bull call spread or bull put spread, I should have only a capital of more or less 4.0 or 400 so that when I apply the 50% stop loss, then I will be losing only more or less $200. So my 4.01, since the trade goes with me, 4.01 capital is now 7.92. And this is only a 1 week trade. 7.92, that's almost 8.0. So 4.0, it became 7.9. That's more or less 95% profitability within 1 week. And I have an unrealized gain of 390. So I placed a limit order. So I'm not sure if it will be hit today. I will just put my limit order at 8.0 so that when it will be hit 8.0, it means that I will have a 100 capital of 400 becomes 400 becomes my capital becomes 800 from 400. So that's quite nice, right? So you can see that if I get stop out at 200, I lose 200. But if I am right, I'm making 400. So that's a 1:2 risk reward. Very nice. So what else? So yeah. So not one. All right. So let's check NCLH. CLH. I got stopped out also NCLH. Open 26.87, stop loss 24.88. So I think I am already stopped out in this trade. Yes, last week. Just forgot to record. Okay, so this is minus 1 hour. It's already closed. But yesterday I was a winner for KR. Even today, even if I will hold the trade, it will still be a winner. So KR 33.96. Uh, took profit at 35.9. 33.96 minus 35.9. Okay, let's calculate that. So D90, E90. So it's a 1.5 R somehow. Okay, so that's it. VNT. So I don't know also the status of VNT. It's also not moving. Price is rejected at the central pivot range. I think I will also close this one because nothing is happening for 2 weeks. So I'll close it at break even. So price now 33.96. So 33.96. Okay, so alright, so basically we are good. So now guys, what I'm going to do is that I will show to you how I am going to trade a weekly option for SPX. So in option trading there is weekly and monthly, and there are also multi-month option. So based on this, SPX is still uptrend on a daily basis. Price is already at R2, but it can still fall back to the central pivot range, which is at So yeah, in this case, it can also break out, but this SPX is still uptrend. So what I can do here is that I think in the next week, SPX will stay above. So this is my previous week central pivot range. So I will choose a strike at 37.70. 37.70 weekly option. PX. So this one is not, this weekly option is not actually part of the open portfolio, but I just want to trade the weekly option for SPX for the sake of practicing also my strategy on the weekly option. So, okay, to transform it to weekly, you choose this one, and you will get weekly option. So the next Friday's weekly option, so meaning that if we are here Tuesday, the next weekly option is February 2, February 3, not 2. So this one is 8 days out. The strike price that we are choosing is 37 7 37.70. Let me see that is around 22 delta. 770 sell, and 10 points below I will buy a put option, and margin impact is 1000. So this is my max loss if ever SPX will crash. So my loss will be limited. If if SPX stays above 37.70 within 1 week, even if it will fluctuate here, even if it drops but won't close below 37.70 in the next 8 days, I will be profitable. And how much? It depends on what price I will be filled with this trade. So the spread now is 1.601, so I will put the 1.3 as the bid. So that means that my max profit, should SPX stay above 37.70 in the next 8 days, my max profit is 1.3. So this is what it means by, even if you don't do anything, even if the stock won't do anything, even if the stock goes up much better, even if the stock will make a sideways move within 8 days, do nothing or drop to 37.90, as long as it is not closing above, or it's not closing below 37.70 8 days later, then I will get 130 profit. Okay? Next Tuesday, I will come back to you and explain what happened to this trade. Right. So let's submit that. So hopefully it will get filled. There will be 1 hour more before the market will close. Okay, that's my weekly option using SPX. So right now, let's find some opportunity using my screener. So guys, for those who are interested to my weekly stock updates, let me know. I also give updates on Forex market, crypto as well, and the US stock market. This one is a squeeze, but it's already fired. This one is a tart already, so it's already late for us. So this one looks good. DKNG. Actually, DKNG, I have it here. Somehow profitable with $19. So I will trade with an option. There is no squeeze. 1 hour. What about 4 hours? hours. This is squeeze at 4 hours. So it's above pivot, central pivot range. Everything is fine according to my criteria. Then I will trade DKNG bull call spread. So basically I can trade already stuck, but I have already a position, but I will still set up an option trade DKNG. How do I express my trade into on an option? So since I'm bullish upward, I will be dealing with calls. And since the implied volatility is low, since there is a squeeze, then it means that options are cheap. I will be buying calls instead of selling them. And 40 plus days out. So let's February, let's choose the March 19. It's too much. March 5. 0.7 delta call. Where is it? Somewhere here at 49. I will use 49. I will buy 49. If I'm buying 49, it will cost me between 830 to 915. But I want to minimize, so I will reduce and I will sell to reduce. So I will sell around 4. That one which has 4. So let's see this one. So this one maybe I will be at the middle, so at 4.0. Hopefully it will get filled today, if not tomorrow. Okay, so this is a bull call spread again, buying 49 strike call and selling 57 strike call. The cost will be 4.0. Still pending, so I will just wait until it gets filled. If not today, then tomorrow. Alright guys, so that's it for today. Watch out for my next open portfolio live. God bless and good luck to your trading.